We'll be talking about Meta. All right. So Meta is the company that owns Facebook and Instagram. All right. We all use, well, not all of us, but a lot of us use both of these companies, Facebook and Instagram. But they also have a lot of other companies within it that holds it up and keeps it profitable. All right. So that's why I believe Meta is a great company. All right. They have multiple different revenue streams, and this is something that everybody could use, right? They're trying to reach out to billions and billions of users. So we looking at Meta on the daily chart. See right here, the 1 day. Looking from this chart, we can see that Meta from 2025, where's January 2025, right? So from January 2025, okay, Meta is actually down. Right, so but it's really break even. So this is the same price you could have bought it last year in January, right? So Meta is a company that hasn't really been having a phenomenal past year like some of the other companies that we invest into. But Meta is still a great company. That's why I'm looking to buy it once it gets to my certain buy point. Now that I have my support line, I'm going to add the resistance. I always like to level it out both sides just to get an understanding of what exactly the stock is doing. Alright, so I took it from this April low in 2025, brought it up to this November low in 2025, and I had those 2 points marked out. Then I got it from the high in March of 2024 to the high in February of 2025. I'm actually going to switch it out to a weekly chart just so I can see if I can see anything that would be even more support for this chart. Alright, so if I'm looking, I can see this line here. As you guys see, we have multiple hits on the support line, right? We have multiple hits on the resistance line. That's what you like to see. You want to get price within a range. Now, just looking at this range, typically you would want to buy Meta down at this price right here when it gets to this 599 and 600 area, right? So Meta is already coming close to a buy point for me personally. My first buy point would be around this 585, between 600 and 585. My next buy point or buy area would be right here where this pivot low happened. 500 to 480, 500 to 480 would be my next buy price. And my last buy price would be this last hit down here, this support line, which would be around 279, and that would be my low to boat price, right? But honestly, I'm just looking at these two prices right here for 2026. Maybe if it comes down to these prices, but definitely if it gets to this, once it gets to this line, it's continuing to sell off. Whenever it gets to it and touch it, that would be something I'd be interested in buying into and start accumulating Meta for 2026, because it will have a phenomenal run back up towards this line. It'll be around 1,000. So I think that's where Meta is going in the next bull market, around $1,000, maybe more. So
to the stocks I am buying though, and Meta Platforms, ticker META, isn't exactly an undiscovered gem, but the market doesn't realize what kind of dominance this company is about to have and what it means to the stock price. Not only does Meta own 3 of the top 4 most popular social networks, that's Facebook, WhatsApp, and Instagram, with more than half the world's population logging in regularly, but it's about to leverage that control into massive changes to advertising and consumer electronics. I highlighted an interview back in May where Zuckerberg outlined his plans to basically take over the trillion-dollar advertising market. Meta is putting in place a system that businesses can just describe their product and a goal, and Meta is going to use AI to design an endless amount of ads for testing and optimization. Zuckerberg even says here, We're going to get to a point where you're a business. You come to us, you tell us what your objective is, you connect to your bank account. You don't even need a creative. That's no ads, no text, no graphics, anything. Meta is going to put the entire advertising world out of business and collect hundreds of billions of dollars in the process. Just as big, though, could be Meta's move into consumer electronics with its AI glasses. Zuckerberg has been spending aggressively for years to develop some kind of a consumer product, first with its Oculus headset, and now with the Ray-Ban glasses that could finally be the company's cash cow. Just think about this. If Meta can be the first to market with a workable AI consumer electronics device, leveraging the billions on its social network users, this could be for Meta what the iPhone did for Apple, which has booked over $2 trillion in revenue since that 2007 launch, now 66% of its total sales. That growth would be huge here and way over the 21 or 18% sales growth expected for this year and next. Even that, though, to 200 billion, 235 billion expected next year. Here we see in the earnings estimate, we do see some of the weakness in some of these hyperscalers and AI stocks right now is that $23.86 reported in earnings per share last year, only $23.17 expected this year. That is because these companies are spending so aggressively on research and development, on those AI infrastructure buildouts, on marketing, on all of this idea that they're really eating away at their profit growth. Okay, so 21% revenue expected growing this year, but flat earnings growth over the last year. We can see, though, that over the next year, expected almost 50% growth in its earnings per share to $30 per share. On that kind of revenue growth, and especially on next year's expected earnings growth, shares here are not expensive at about 8.8 times on a price to sales basis. You can see here, looking over the last year, shares have traded as high as 11 times price to sales, but also as low as about 9 times price to sales here. So right now, shares are trading at about their lowest on a price to sales valuation as they have been over the last year. A very good deal here on that growth, especially if you factor in the potential growth on not just the advertising, but the Meta glasses as well. Price to earnings a little bit higher here, 28 times, just because of that lower earnings growth that we are seeing this year with all that spending. Next year, though, those earnings jump 50%, and we see this PE ratio come way down.
But just understand, Meta factually is a great long-term stock. It has also factually been a horrible stock the past 6 months and the past year. There's just no debating that, right? There's no debating that. So that's just facts. But what is actually going on with the business model? Well, this is where Meta's revenue has trended. And we're right here. We're looking at 1000xstocks.com. This is where analysts expect Meta's revenues to trend. If we look at the operating cash flow on a trailing 12-month basis, it's never been better. Looking amazing. Look at the operating income of Meta and how that's been climbing. Unbelievable. Look at shareholder equity of Meta and where that's been trending. Look at the shares outstanding. They've been bringing that down. Like, these are all the things you want to see. You want to see revenue up and to the right. You want to see operating cash flow up and to the right. You want to see operating income up and to the right. These are just base business fundamentals of what you want to see. You want to see shares outstanding going down. You want to see shareholder equity going up, right? But let's make this even bigger. Let me show you something even more meaningful. Listen, if we look at the revenue growth Meta's been reporting recently, we're talking it's over 20%. Now, that's special. And the reason that's so special is we're talking about a company here with Meta. This is $1 trillion plus market cap. So the fact that they're able to grow revenue at a 20% plus clip is pretty shocking. No one else in big tech outside of NVIDIA has been growing revenue 20% plus clip. Not Apple, not Google, not Microsoft, not Amazon, right? They're the ones to do it. They're the ones to do it. Outside of NVIDIA, and obviously there's a huge chip cycle going on, so NVIDIA's revenues are going crazy and will continue to, and then AMD's revenues are just going to start going absolutely insane. But you look at big tech, like Meta's the one. It's the one with the big growth. So if you want big growth and you want exposure to big tech, you gotta look at Meta first and foremost, right? And with Meta, you could look at that and say that's more sustainable growth. Because obviously there's a massive chip cycle going on right now, right? And will for the next at least 2 to 4 years, right? But you could say maybe that's not as sustainable. You can make an argument for that, right? with a company like Meta, like it's not like they have some super cycle going on right now for their business model where it's like everybody needs this like certain chip that Meta has, right? Like they do need NVIDIA's chips and AMD chips and like Micron for memory, right? MU stock. Like Meta could be seen as much more sustainable in regards to this growth. And so to be growing at a 20% plus clip, the last quarter, if I recall, I believe they grew revenue 25% last quarter. I think on a constant currency basis, it might have been 26%. It's insane. Absolutely insane, right? So that matters significantly. If you even look at next year's expected revenue growth from analysts, 18%, keep in mind Meta comes in and beats analyst estimates regularly. So if analysts are expecting, 17.7% revenue growth next year, don't be surprised if Meta comes in at 19%, 20%, 21% and beats that number, okay? Gross margins 80% plus, net margins 30% plus. That's like the holy grail for a business model. If you can have your gross margins be 80% plus and net margins 30% plus, like you're running a freakish business essentially, okay? 2-year stack expected earnings per share growth is something very helpful. We have on advanced metrics for 1000X. Nearly 50%. Where are you getting that sort of growth in big tech land? Like that's insane. What? 2-year stack expected revenue growth, 40+%? These numbers are ridiculous. Absolutely ridiculous. Meta has, right? Now, additionally, this matters significantly. Zuckerberg is 41 years old now. He just entered his business prime. Think about what this man has built over the past 20 years, right? A company from nothing into this gigantic company that even the governments fear, right? Because it's so powerful. They have so many users on their platform. It's unreal, right? The man just entered his business prime. Your business prime is very different than being an athlete, right? Being an athlete, your prime is like, let's call it 19 to 29 years old. In business, it's very different. Your business prime is 40 to 65 years old, right? 40 to 65, and he just entered that bracket. So if this man wants to run this next 10, 20, 25 years, he's got it, right? He's absolutely got it. By the way, my camera situation's all messed up. I'm staying at, a resort right now. So, it's like, not the best situation, but I hope you guys understand, okay? Now, the concern is the spend that's going on with Meta, right? The CapEx 2024, 40 billion roughly, just under 40 billion. 2025, 70 billion plus. 26 expected to be over 100 billion. So that's the concern with Meta is while they're spending so much, Zuckerberg spending's out of control again. And it's a big concern. It's a big worry out there. But who are we to doubt Zuck, right? I mean, look what the man has built. A company from nothing into $1 trillion plus company in, 20 years? It's insane. Since this company went public, the stock's up almost 2,000%. He's got a company so powerful that governments fear it, right? And always looking in because they're like, it's so powerful, right? I mean, it's insane. And so, you can doubt Zuck here, you can doubt Zuck there, but I'm just like, do what you want, but I'm like, it's a man you don't want to doubt too much. Let's just put it that way. Like he comes through. He always comes through. Now, additionally here, Meta has their Threads product, right? Threads has reached around 400 million monthly active users, and that was as of a couple quarters ago. I wouldn't be surprised if the number is much bigger now at this point in time. Keep in mind, Threads is basically untouched right now. What they're trying to do with Threads is I believe they're trying to take it to somewhere roughly around 1 billion users, and then they're going to worry about monetizing that platform. So you got to understand, Meta just in the past 2 years has launched a product here that has a potential to be worth $100 billion, if not several $100 billion. And they just launched it like that with a small team. It's insane. It's insane, right? And that's basically untouched right now. So that's not even a story really for 2026, 2027, but keep in mind 2028 and beyond, Threads could likely end up going into monetization time period when we're going to start getting significant revenue growth, and then you start having a new level of revenue growth at that particular time coming from Threads, right? WhatsApp is still early in regards to monetization of WhatsApp, and WhatsApp has over 3 billion monthly active users, and we're early there. for monetization. So just understand the money they're going to make from WhatsApp is going to be insane over the next several years, right? Then they obviously own the two most powerful social platforms out there, Facebook and Instagram. And it's insane, right? And so it's just an amazing company. Like, it's one you kind of got to own, right? I wonder if that was a stock I bought today. We'll discuss that momentarily, okay? So that's Meta. That's what's going on there. The concern around spend. At the end of the day, it is what it is. It's been a phenomenal stock for me. It's going to continue to be a phenomenal stock for me. Where Meta stock goes in the next 3 months, who knows? Could I see Meta going 500 something in the next 3 months? That's possible. Could I see Meta bouncing back strong, and next thing you know, it's a $750 or $800 stock in the next 3 months? That's possible as well. So whatever happens, happens in the short term.